A lot of things happening right now in 2025. I almost said 2023. Man, I'm getting confused right now. But a lot of things happening in 2025, and I think one thing that's certainly interesting is the outperformance in commodities lately. Something that we haven't seen for a long time is this outperformance. Commodities are really moving. Sam, do you want to bring up your chart of CRB or was DBC to SPY?
Yeah, last Friday I was watching this DBC SPY chart all day long. It had its best day since 2022. This is what you see at the beginning of new trends. And I think that trend is higher for commodities relative to stocks. That trend has been lower since it peaked in June 2022. And for you stock market junkies out there, you'll remember that's when breadth in the stock market bottomed, really, um, is July 2022. And of course, you didn't see the indexes bottom until later in October, but there were signs of inflation cooling off.
No,
And
and
I think
I
it's the
love the
reverse
nature
story today.
charts.
So, like, stocks are going to be under pressure if this is the case, you know?
Yeah, I think it's super interesting, and man, I gotta find that chart. But I had the chart on the morning show today, which was the Dow Jones Industrial Average to oil, and that's selling off really hard. And once again, oil is majorly outperforming everything right now. So but it's significant. Like normally, if I'd see a big bounce like that or a reversal like that, I would just go, okay, well that's a 1 day or 1 week move, or it's commodities broadly or something. But it's kind of significant because it's oil. Oil is significant always. The move in oil is kind of significant. But I'll pass it to Kevin. So, what do you think? Is this a 1 day move? Is this short lived, or do you think this is an actual trend reversal here?
That's a good question. I think this move in oil is short lived, honestly. And I'm not trying to be a contrarian just to be a contrarian. I mean, the technical setup says it's going to hit 80. When you're kind of looking at the longer term moving averages, you can also make that case. And there's a long term trend line to the downside that it's pretty much testing right now, right? We're in pretty much a $2 range of that moving average. But I do believe that this is going to be a little bit of I think this is a sell the news event, and the reason why I say this, we have to always kind of keep, get a perspective of this, right? Like, there's demand side analytics, right? There's supply side analytics. Kind of just depends on where you fall. You can have a blend of two. I like to have a blend of several here, but I tend to find that when you're looking at crude, for sustainable price movements, I'd like to look at more demand side drivers in order to give sticky prices rather than supply side factors. So ask yourself, or those that are watching, what demand side factors have you heard in this market over the last 3 weeks from the data points that we have that scream that there's bullishness right now, right? Is there an increase of consumption? No. Is there increase in gasoline demand outside of seasonal trends? No. Are you still seeing? I mean, we had import-export data coming from China. There was a slight uptick, but if you kind of look at it, there's also currency headwinds that kind of impacted that. And China just had the 2024 was the first year that they saw a negative decline in crude oil imports outside of COVID-19. If you take COVID-19 out of it, because we could say that's synthetic in a way, right? If you take COVID-19 out of it, it's the first decline that you saw in imports from China over the last 20 years, which is remarkable. So there's nothing that, from a demand side, that says, man, like this is time to get bullish yet. And I'll tie that with this whole notion of this, inflation kind of reaccelerating, which let's call a spade a spade. It is for right now, but is it going to be sticky on the good side? I don't believe so right now to be the case. Now I can go back and say, all right, the demand side is not there. What about the supply side? Yeah, I got a lot of stories for the supply side. The increase in sanctions against Russia and the dark fleet, that should have an impact when it comes to India imports and how they source oil. That could also have an impact when it comes to Iranian oil, even China for that matter. So that's your supply side shock there. You have these weather events, the Arctic blast that we had last week. I was in Mississippi last week. Dude, they literally saw maybe an inch and a half, maybe 2 inches of snow, and the whole place shut down, right? But that's just like how it is, right? So you had this Arctic blast weather premium being priced in, boom, you saw prices move to the upside. Yesterday, NOAA also then updated their weather forecast for the 19th through the 25th. They're looking at another Arctic blast. This one's going to be a little bit different because it's going to shift westward a little bit and then move down to Texas, or at least northern Texas, right there pretty much in the Permian Basin region. Most likely, probably like 75% of the Permian is supposed to get below, significantly below average temperatures, right? And that's going basically from the Bakken down here to Wyoming, Colorado, and then all the way down to Texas. So you're having two of the major oil producing regions, as well as gas regions, potentially being impacted. That could have an impact when it comes to extraction. And then also when it comes to pipelines, which I think that's really the biggest factor being put in right now. So you have the weather side that's also catching a bid here. Once again, there's nothing in there that says, hey, demand side is actually increasing for crude. So I feel like technically you can make a case, yes, this is a breakout. Where do you see an area of resistance? $80. Wrote about that when I was looking at the Q1 outlook. You can look at 67 to around 75 as your range for the quarter. January is going to be your best month if you want to see a price advance. Utilization rates, refined rates are also expected to actually decrease pretty significantly over the next 2 weeks. And so that's going to reduce your throughput or the product supplied to the market. That'll also then shore up supplies, and that can also stabilize prices in the near term. Right. So everything that I'm saying is supply side driven. Nothing is like, oh man, like people found a whole boatload of cash under their mattress and they're ready to go berserk when it comes to consumption trends. There's nothing that says, okay, there's a massive reacceleration in China yet. I believe it will happen, but yet that is really kind of telling us this. So that's kind of where I'm at. I would say kind of stay tactical with it for now, because the fade and if we do see a fade, the fade could be fairly aggressive to the downside. Natural gas, kind of the same thing, right? So natural gas, even today, I mean, look at, if you have an intraday of natural gas, I literally was talking to somebody over the weekend. It was on Friday. It was so funny. And this is not a recommendation, but let's just say that somebody did short natty on Friday, right? Because of these same factors that we're kind of talking about. Weather premiums never last for too long. And you got to be the first one out. You got to be the first one in, and you got to be the first one out. You don't want to be the last one out when the actual new weather report kind of hits the wire, right? Because that causes devastation. Look at natural gas today. Natural gas hit up to $4.39, $4.36, basically $4.40. And then it literally faded that whole move. We're barely positive on the day. So I feel like these things are going to be fairly short-lived. And that's kind of how I kind of view the oil market. Now, you could have a massive reversal and maybe you do see demand trends kind of moving to the upside. And if that's going to be the case, then I would get a little bit more enthusiastic about the price move when it comes to oil. But for right now, I would be very cautious about this move in the near term. Once again, it could probably last for another week or 2 weeks because you have that favorability when it comes to weather, utilization rates. You got some of this stuff, but I feel like it fades. And then I want to also say, I actually do foresee the Trump administration actually rolling back a lot of these sanctions. That probably would be the first olive branch that the Trump administration would extend out to Russia in order to try to come up to some form of agreement, if you will, with this Russia-Ukraine conflict. And I hate saying this, I did not vote for Trump at all. But I will say the last week or 2 weeks, the policies out of the Biden administration kind of seem like they're a little salty, maybe a little bit more than salty right now. And I think that's kind of how it's being left. And I don't think that's the best way in order to do so. So like news around NVIDIA and these chips, potentially being impacted, I feel like once again, that's going to be an olive branch for something to be dampened down. I think the Russian sanctions are going to be once again another olive branch. If anything, the Trump administration is going to hit Iran more than they are Russia. That's just, I think the writing's really on the wall there. And if they do hit Iran, and when I say hit Iran, try to enforce the sanctions that's out there, that could have a meaningful impact of around 1.4 to 1.6 million barrels per day. Theoretically, we don't have the exact numbers, right? But theoretically, that could be the impact. So I also think that there's also going to be an unwinding type of an effect that does take place post inauguration for these energy products for right now. So that's kind of where I'm at with it.
No, I like that because there's just so much going on, and we have to always think about the long term trend. And that's something that's the reason why I always ask you these questions, because you're looking at the fundamental angle, and I know it's a very objective angle that you always bring in. So just kind of understanding that. The technicals, though, are looking pretty good. So what are we seeing? Salmon oil and natural gas and the energy sector in general? Anything that you're
natural
looking at?
gas in particular looks really, really great here. I think you want to be a buyer of a retest of that like 360, 350 level, but like Kevin's saying, I think there is some concern for chop in the near term. You see these massive trend reversals like we have going on here. They usually take some time to really get going and get started. So I wouldn't be at all surprised to see some churn here. I think this crack chart is really interesting. Not a lot of people are talking about this, but I think this goes to what Kevin's saying, is that the demand side is not all that strong. So how important is it to you, Kevin and Jason, to see a recovery in the oil refiners? Are you watching the stocks, or are you watching the crack spreads? What should I be watching for a rebound here?
Yeah. So Exxon already, like, I won't say they pre-announced, but they did. They basically, Exxon usually gives out their high level guidance of what the impact is going to be for margins on their businesses for the quarter. So that came out either early last week or the week before. Mind you, I'm kind of losing track of time here. And everything was impacted to the downside when it came to margins outside of upstream or natural gas, right? Which, was low, very, very low base there, right? When you're looking at the profitability. So when you're kind of looking at the refiners and you're looking at the crack spread, so you're talking about the 3-2-1 crack spread. So for those that do not, I would assuming that's the crack spread that you're talking about. There's like 20 different ones, but
I think that's the most widely followed, isn't it?
Yeah. So the 3-2-1's like the most simple and widely followed one. But 3-2-1 crack spread basically shows 3 barrels of oil to make 2 barrels of gasoline, 1 barrel of diesel, right? We know that that's not like 100% what the split's going to be, but generally that's kind of what traders really kind of focus on here. So what are you actually seeing when it comes to crack spreads? And that's what's actually very interesting. So we started seeing this breakout to the upside from crude oil, basically December 31st, let's say December 30th into December, right? So at that time, crack spreads are sitting at around $17.60. Now, crude oil has moved to the upside. Heating oil has moved to the upside. And we put an asterisk by heating oil. I want to go back to that. So just remind me. And you've had gasoline kind of move to the upside. But what's actually happened with crack spreads? They've gone down. Okay. So the spread in the byproducts being gasoline and heating oil or diesel, however you want to really price that out, compared to the move that we've seen for oil, is actually theoretically gone down when it comes to the marginability of these products. Now, I would not trade refiners based on that for a week's trend, right? They're going to make profitability, or they're going to have their margins set based on their own structure, and as well as the time frame to be intact here. But you're not seeing this massive gap to the upside when it comes to the byproducts compared to the move in crude oil. The one benefit that I will say, and got to give props for the bulls here, and we've been kind of mentioning this, is heating oil is going to be your first one to move, right? And heating oil has had the best performance out of all of them last time that I checked, to the upside. So I can also go on the other side and say, hey, heating oil is doing what it's supposed to do for now. How long does that last? I think you get a little bit more bullish on the heating oil side just because of the weather aspects of it. But once again, that's something that you're going to have to kind of be mindful of. Heating oil is up 1.7% here today. Crude oil is up 2.85%. That just signals to me that this is more speculative driven rather than, something that's meaningfully like kind of taking place here in the market. But overall, like, I'm not hating on this move, right? This move can continue to rip too. You have geopolitical risk events too. And, Israel started hitting southern Lebanon again, right? Like there's a lot that's on the radar that can continue to push prices higher. I just personally, if you guys have been following this we've been doing this for what, a year, 2 years now, Jason, what have you, right? If you guys have been following this, you know that I like to look at positioning from the CFTC report. I like to see producers actually taking the first action. So you want to see producers, right now, if you start seeing producers selling contracts, that probably means that a reversal is going to be intact. You see them buying contracts, that usually means that they're not only looking at price advances, but there might be a supply issue or a logistics issue. And what did we just talk about at the top of that? Everything that we're talking about is logistics and weather related. Nothing is demand side driven. And so that's where I get a little bit cautious. Now, you can have a scenario here from a technical standpoint, go up, hit 80. What's that going to do? That 80 level is going to be the August highs, mid-August highs, right? You come back, you have this cup formation taking place. You come back, retest 80, pull back, come back and retest 73 and a half, maybe 72, and then try to push higher. That could be the case, but you got to have a bigger catalyst than some Arctic blasts hitting the market. Arctic blasts are not going to get you to the promised land for sticky prices. It will have an impact on inflation. So the reflation trade itself has been intact. And you kind of got to get outside of the energy. The reflation trade's definitely being reflected in Natty. Make no mistake. I don't think Natty is at a point here where it's completely overbought, and in a week or 2 weeks from now, after everything subsides, it goes down to $1.90 or $2. I don't think that's the case either. If you look at European if you look at European natural gas storage inventory levels right now, you can look at this from Celsius Energy. You can go on Google and just look this up. They're sitting at around 67% right now in the EU. We just kind of started this. We're in like the first quarter of 4 quarters right now of the draw season, in my opinion. Their goal for the EU is to be able to remain above 50% for natural gas storage levels, at least by the end of the season, by the time injection season happens. So let's say this, you have a little bit of a disruption of Ukrainian natural gas flows from a pipeline standpoint, but understand that is a news narrative, which I think also got bid up, that didn't tell the full story. So they're stopping the flow of natural gas through that pipeline, but Russia is actually expected to increase LNG exports to the EU. And then the United States is also going to be able to backfill. You're also going to have like Qatar also kind of backfilling those inventories with LNG. So this weather premium that you have is the key part for this, because it's like, if you can't move natural gas through the pipelines down to these export facilities for them to be processed and loaded onto a ship, right? Because you have issues in the back end or wherever, that's where you have the supply shortage issue coming into effect. That's where you disrupt supplies going into the EU. That's where you can continue to see sustained prices to the upside here. But yeah, that's kind of like where I'm at. But heating oil, diesel is actually making a decent move. Let's see if it's going to be able to sustain itself. That one has actually surprised me. And I think, let me go to my weekly charts, guys, because you know me. I want to go to my weeklies. If it hasn't, I think heating oil actually got really, really close. Okay. It's still about 20 cents away from that 200 period moving average, that 200 week moving average. You know, that's a key one for me. But you got the MACD cross, which are looking good. CCI actually is on a bearish divergence. Oh, not a bearish divergence, but it's hinging lower right now. So you have a day where it's up 1.7%, but price action of the moving averages are kind of showing you, the oscillators are showing you that maybe we're hitting an area of resistance. And this is literally the price point, the highs of today to the T is the 100 week moving average. So good move, not a hater. I just say head on a swivel for right now, because you're going to have weather events, unless you're going to have a sustained weather event for the next month and a half, 2 months. Weather events fade really, really quickly. And that's where I get nervous about this move. And then the unwind, because a lot of retail is looking at this now, right? Every retail trader and their mother wants to be in crude. The unwind can also be fairly quick, because retail traders don't usually have diamond hands when it comes to any commodity product out there, in my opinion.
No, I like that. So, yeah, I think the thing, everybody continues to overlook heating oil. I think that's going to kind of continue to be a thing. One, because let's be honest, not many people trade it. Like I trade it. I'm a futures trader, but there's not a bunch of people out there who trade it. There's no ETFs for it. There's not many ways to really have a retail trader trade it. But I do think that if you are interested in futures and you do want to look into it and you have the cash behind you to do it, heating oil is something that you should definitely add as a contract you trade. Like Kevin said, this time of year makes the most sense. So that's the one thing I continue to look at. This time of year, seeing the way heating oil is working, this is going to be the time where we're going to see heating oil kind of be the outperformer. It broke out a couple weeks ago. We covered it on here. We continue to hold this trade. At the moment, we're still long the trade. But I think something to tactically look at is that 200. Is that the 200-week?
The 200-week moving average. Oh, I'm sorry. I thought you were talking about me.
Yeah, no, I have the 200-week up here.
Yeah.
Which is sitting at 80.14, right?
Yeah.
Yep. So I mean that's a great area to kind of for everybody to look at, whether it's oil, heating oil, whatever. Those are going to be kind of resistant zones. Now, once again, you don't want to take trade. This is the hard thing about long-term trend following trading. And I give people a quick tip. When you're building systems and strategies, let's say you're buying 100-day highs, you're selling 50-day lows. There's going to be times and periods that those buy signals come in when you're below the 200-week moving average or 200-day. What you do find out is that you could filter that and say, I'm only going to take these signals above the 200-day and then backtest it, see how that works. But the thing when you backtest that, it actually doesn't work very well. So you actually filter yourself out of good trades most of the time. So I do think that it's worth taking that shot. If you're a long-term trader, you get a signal, take the shot. But I think if you're tactically trading, look at that 200-week moving average as an area of either to take profits, an area of resistance, an area that it needs to clear before you buy it, even if you don't have a position today. So I think there's a couple things to look at tactically here. And
then look, natural gas down 1% right now. Now it might actually catch a little bit of a bid at $3.95. It might catch a bid, but even if you're looking at the natural gas move, I mean, it's down from the highs that it printed last night to where we're at right now. It's down 9.8%. So just once again, usually what happens with retail trade, because you're talking about a system, and I'm not trying to talk down to retail traders, but I want to make sure that people kind of understand what usually happens. When you have these aggressive moves to the upside, especially for natural gas on the open, right, which happens overnight, and it's not related to the rolling of a contract, because a lot of times it's the roll, right? We get like 5 days up into the contract ending, 10 days or whatever. You'll get a roll. You usually have a lot more short sellers in Natty than you have longs and Natties. So you get short covering activity taking place. You have this gap to the upside, and then you have new repositioning that kind of scales it down. But when you have this move like yesterday evening, where you hit $4.37, you do ask yourself as a trader that literally watches this stuff every day, how much can that actually sustain on a daily basis without any news? I don't want to say without any news. There was news, right? But do you sell into strength? And I feel like that's exactly what happened here. I think we were selling into strength, and we'll see if we do get another bounce here. But yeah, that's just it's an interesting thing. Like I said, if a trader was short this on Friday and I saw this last night, the first thing would be like, damn, but then the second thing in my mind is like, probably ain't gonna last, right? So buy a little bit of time with the options that you have, and then just kind of settle up for the ride. And then you can also, it's going to be very difficult, but you can also do diagonal spreads with options. I think that we're at a level right now where if we do see a flush, it'll be a very quick flush. So sometimes diagonals may not work. So what you'll want to do, like if you're looking at UNG, you want to set up a diagonal where you basically sell the front month or the front contract by the longer end if you're buying puts, right? So I'm just making an example. You buy the $20 puts, you sell the 18.5, but you want to be able to make it so that debit that you have for that calendar or that diagonal, even if you max out, and let's say you have a massive reversal, you still don't have to worry about the rolling and trying to get really cute with the trade, right? And so the diagonal strategy also could work. Crude is another one that you could also pull off a bearish diagonal trade too. If you want to look at the crude options or if you want to use USO. I think with the vol that we're seeing right now, I hate saying this because I like to trade the contracts, but a lot of people don't have the stomach to trade crude oil futures or crude oil futures contracts. You could trade the micros, hint, hint. Those are actually pretty liquid. But if you wanted to use USO, this kind of is the time that you can actually trade USO and kind of get away with it. Because you're either going to have a high IV. If you're going to continue this to see this continuation of the upside, you're able to kind of compensate for the premium because you do pay a fair amount of money for those premiums. So kind of go out in time and capture those. So that's the crude trade. Like I said, I'm more of the mind of maybe we hit 80. Maybe we just hit 79 and some change. We're down now to 78.65. Look what happens with the close here today, which is going to be, the open outcry close, which is the settlement close, which is 12:30 Mountain Time. So that's what, 2:30 Eastern. So look what actually happens at 2:30 Eastern. That'll kind of tell you where they mark to market crude into the close is going to tell you a lot. If you see like this fade going into the close and you close at 77, I think that kind of tells you that it's more like intraday enthusiasm buyers and then kind of just selling out after that.
No, I like it because it's understanding the different time frames. And I think that's always incredibly important in trading is understanding you got the breakout traders who are going to take these trades and understand that you have to take many of these trades to get a couple right. That's how it's going to work. But if and the upside could be huge on some of these trades, and this is how you really catch outliers. But if you're a short-term trader and you're trading at like, let's say you're using leverage and every size is too big, yes, you are going to run into situations that are not going to be sustainable. So like Kevin said, if you are trading large, you want to be tactical and also just understanding your time frame. Do you want to have a tactical time frame? Like, are you short term? Do you want to get in and out of trades? Are you long term? Do you want to hold these trades for 6 months? I think that's something that we don't talk about enough as traders in general. Like, we should be talking about that more because me coming on and talking about, like today, I put the thing on Bitcoin. Everybody's talking about this huge breakdown of Bitcoin. All of my signals are still on the long side, including short term trends. Now, granted, I'm a very long term trader. I trade in a 4 month to 8 month time frame is probably minimum for me. So just looking at something like Bitcoin, this is, if we're looking at this chart, like, is that an uptrend or a downtrend? It's obviously an uptrend. But Sam, go into like a 1 hour chart here. So if we're going into a 1 hour chart and you're trading it, very short term, this is a downtrend here. So it's just identifying what type of trader you are. I try to stick to the longer term time frames, but probabilities of my win rate go up. Probabilities to make more money goes up for me. Finding outliers, catching these big moves that we're talking about. Like Sam's looking at these huge bases on things. Can you bring up that aluminum chart, Sam? Sam's always finding the coolest shit in the market. And Kevin, I think you talked about some of these the other week too, like Alcoa and some of these companies, right?
Yeah. So alumina, so the actual compound for aluminum, right, is actually doing it's ripping to the upside. Aluminum, for the most part, is, I would say, kind of basing out right now. What you're seeing with the aluminum market just in general is that because the input costs are so high, and this is called like the smelting rates, right? So think of smelting rates as like the crack spread, right? What does it take to extract, receive raw goods, and then what does it take to actually smelt it into the finished product? So those margins have been completely destroyed. And so what you're seeing now is actually smelters kind of reducing their output because of that, because there's no real incremental gain for them to continue to churn out because it's just going to push aluminum prices to the downside, where alumina is kind of just doing its own thing. There's some structural issues there. So yeah, that's kind of like where that market is. You can make a case that it's kind of basing out, and that's what I brought up Alcoa last week, just because like they're the second biggest producer of finished aluminum in the world. So, their margins are being squeezed for right now. But if we start seeing prices kind of going up, especially with the China stimulus trades, I think Alcoa probably would be a beneficiary of that. Even though the chart, I would say it's kind of in no man's land, right? It kind of says like, hey, may you want to break down again. But it's a it's a stock that kind of gets some exposure if you're interested in it. If you think that reflation trade is still going to remain intact.
Isn't it a very similar trade to copper? Just a little bit more juice.
Different metals, right? So every metal is going to be kind of different.
It's just that the base and industrial metal theme though. Like
Yeah.
copper's kind of the leader of the group, and then you have aluminum's a pretty significant contract as well.
It is, but the recycling dynamics within the aluminum market and copper market are completely different, right? Like they're completely different. So we usually don't talk about recycled goods here, but for aluminum, it actually does have a monumental impact when it comes to overall supplies in the market, especially when you're looking at the recycled business that we have here in the United States, where we're able to kind of bring back into the market, right? So because for aluminum and copper is the same way, you can recycle copper, but aluminum is a lot more prevalent. And so there's also that supply side shock area that you could kind of have with that. But the market is actually expecting recycled aluminum production, if you will, or availability to actually kind of contract this year. And then you're looking at the United States. So that could actually be a little bit of a tailwind there, but you will still need to have the global demand story, the global expansion story, the China reopening story to really kind of get aluminum really, really up and running. But yeah, I mean, it's an industrial metal play. But because I can go to you and say, well, is it palladium the same way, right? And it is, but like the dynamics within the palladium market are completely different when you're looking at supply as well as demand for it. And I think aluminum's kind of the same thing. Like copper is a little bit more precious industrial than aluminum is.
So Kevin, we only got Kevin for a little bit longer, and then Sam and I will get into maybe some currency talk because I want to talk about the currencies and how that's going to affect commodities. So Kevin, soybean oil. Sam brought up a great chart of soybean oil, and he was just talking about it today. And I also know there's other people that are always very interested to hear about soybean oil. Funny enough, we do get comments about soybean oil a lot, which is kind of funny. But
I kind of thought nobody gave a shit.
Yeah, me too. I never talk about it much because of that. Even though I do trade the product, I never even list it because I don't think anybody's trading it. But people have asked questions, so I'm excited to talk about soybean oil today. So, Kevin, do you have any thoughts on soybean oil dynamics, the big one-day intraday move?
Ooh.
Sam, I'll dig up your chart too.
Yeah, last week was the best week since 1983 for soybean oil.
Yeah, you can look at it across soybean oil, soybeans, soybean meal, corn. So we had a USDA report that came out and they revised the ending stock expectations for the 2024-2025 grow year. Actually, I think the USDA, if I'm not mistaken, based on the analyst expectations, I think the adjustment or what was produced in that report was actually lower than everybody on the street, every major player on the street, their expectations. So you saw pretty much almost all of the grains rip to the upside. And that's a good, if you're a bull on it, that's a good thing. Less supply of soybeans out there means less supply of soybean meal, less supply of soybean oil. There's more reliance on Brazil and Argentina, their output. We already know the labor disputes that we are seeing in Argentina that can have an impact when it comes to soybean oil. And then we also kind of talked about this last week that you're bringing on additional crush operations this year in the United States, which I think the market once again kind of was pricing in the fact that, hey, like that's going to be bearish because you're going to have more supply online. So the market got a rare report from the USDA where the USDA gave it to the bulls' favor. Like over the last year and a half, USDA ending stock totals and their projections when it comes to grains just has not been really favorable, and rightfully so, right? There's a lot of production that's out there. So you are seeing soybean oil rip to the upside. You're seeing the same thing with soybean meal. And then with soybean oil for right now, I'll have to look what palm oil is, but there's also a rate differential or a price differential between palm oil, which is very, very popular, and soybean oil. So when palm oil trades at a significant premium compared to soybean oil, what usually then happens? You start seeing those that have been buying palm oil look for the substitute, and they'll go to soybean oil, right? They're not a one-for-one substitute. Not everybody's going to do it, but that's kind of the trade that's out there. And so there has been a palm oil premium being built in, and I think that's also another reason why you're starting to see bean oil kind of rip to the upside here. Trading this over the next 2 months, in 3 months actually, is going to be all weather related South America. No one cares about what's happening in the United States until we start to get to planting season, which is going to be mid-March, early April, maybe, depending on how we do here. So yeah, nice little rip to the upside, nice little base that has been forming. Let's see if it's going to be able to maintain itself. And I don't. This is where it becomes very difficult as a grain trader. So I want people to really understand what I'm talking about here. If you're a bull, you kind of hope that the South American production is not that great and bean size is very low. And unfortunately, you're probably also hoping that weather events kind of impact their production per acreage to really give you a sustained push to the upside. You would like to have the ball in the U.S. court by the time it's April, May, and June. Easier to trade than kind of relying and trying to figure out what the South American production is going to do. So I never wish that like negative on anybody, right? But at the end of the day, that if you are a bull in grains, that sometimes that's what you kind of focus on. The same thing when it comes to natural gas. No one wants to see a cold snap, but you need a cold snap in order for prices to go higher. And that's just how we trade these commodities. Cup and handle that's forming there. So let's see. What do you think about the chart?
Yeah, man, I just see a completed primary trend reversal. I completed it back in October. Then last week you got the old hammer candle at the breakout level. So I think the path of least resistance is shifting back higher. It's a sweet chart. But I see what you're saying about the substitute. You can definitely tell that palm oil has been going down the last few weeks, while soybean oil has not. So,
yeah, and those really do trend. Those do really kind of have a tendency of moving in different directions. And next thing you know, it'll be canola will start to catch up or something. Yeah. It's a very tough market to trade fundamentally, especially like if you want to trade it fundamentally, like it's really, really tough market to trade. But I know some like great crush traders that absolutely kill it and understand this at a very high level. Maybe we could bring them on at some point. That'd be fun. Kevin, anything you want to end on?
Look, I like that copper move. Once again, I wrote about that about a week ago, 2 weeks ago. I like the move that we saw last week. Let's see if you can get some follow through above 438. That's going to be your key. 436.5 is actually the key area of resistance. I'm giving a couple pennies here, but I do like that copper move. I thought that we would have seen a little bit more of a bump based on those import-export data numbers that we had from China last night. But the problem that we have is the market's really pricing in the fact that a lot of the import data that you had, as well as the export data and the massive spike that we saw, is based on a lot of companies trying to front-run tariffs. So that's the problem that you're going to have, right? It's going to just be discounted so far until we actually get more clarity out of the administration. And so if this is the start of a trend for China in the hopes that it is, I think that you'll see that being reflected in copper. I think you're going to see that reflected in silver. I think you'll also see that being reflected into crude. I just thought that we would see, copper has had a hell of a move. I don't even remember how much it was up last week, dude. But like, if you kind of look at the lows that we saw, yeah, basically since the start of the year, let's say the lows were sitting at around $4, right? $4 to where we're trading at right now. Copper's up over 8%. So it's at a pretty decent move, and it's trying to break out. You can call it a double bottom pattern that's taken place since November, hitting that $4 level, crossing that twice, trying to move higher. 436, 438 is going to be your first area of resistance. Next one's going to be 450. In my opinion, like if you snipe that bottom, well, honestly, if you snipe that bottom, then maybe taking profits right now makes sense. And then if you did want to hold it, I would say 450, and then just kind of wait for that gap, right? You can wait for the primary pressure point, which is going to be 468 and some change. That's the big shelf that you need to break out of to the upside. But maybe you can forego that move from 450 to 470 for the opportunity to buy the breakout, which, some people on here like to do, buy the breakout at 470, see if it tries to hit $5. I mean, that seems like that would be the trade to try to pop here.
No, I agree. And, right now we have our reversal model is actually long copper already. So we've been long copper for, I think, 3 weeks now. I actually have it up here. I could give the exact date. That's going back to 12/31. So 12/31, we got long copper. Just so we're looking at this reversal here, but I also agree with Kevin, like to get a real trend, which actually the level for to buy the trend is actually at 438. So that's just a basic signal to get long a trend change. So 438 would be the trend change here on the front month contract. So if we do see that, it is an entry opportunity for a big trend change. So reversal model's already long, meaning the COT positioning got kind of out of hand. Now we're looking at the possible trend change. There's two big areas of resistance, as Kevin alluded to. So buy signal, 438. The area that Kevin mentioned, what was that? 460. What, Kevin?
468.
468. So cool. So yeah. So
hey, can I throw a couple of equities out there real quick?
Of course.
Real quick.
Anytime you have.
All right. So here's what we got. You've got a little bit of a list. You guys can write this down. It's not a recommendation. It's just something to keep on your radar. First one is going to be ticker symbol JHX. JHX. So this company processes fire-resistant wood for residential homes. EXP, another one, fire-resistant wood and polymers for homes. BCC, another one, up 1.7%. Fire-resistant wood, polymers. What happened in California is very tragic, but at the end of the day here, there will be trades to be made for the eventual rebuilding of infrastructure. And so that's the area that I'm looking at. Allstate last week got like a price adjustment to the upside. I feel like the insurance companies are going to take a lot bigger of a hit than what the market. They're expecting $20 billion worth of, which doesn't seem like that's that much, just based on it. So insurance companies, they're not going to be able to raise rates as aggressively in California because of rules, and there's probably going to be an emergency declaration there. But if they are, and they can't raise rates in the state that they had the issue in, what they're going to do, they're going to raise rates and for everybody else, which could also be inflationary. Last thing I will say, everybody and their mother is expecting a hot print for CPI. Okay. So you'd have to actually have a very shocking CPI print in order to rock the market even more aggressively to the downside. So don't be the type of person that's on just one side of the boat. CPI will come in hot, but I think if it does come in line with the street's expectations, you probably will see some pressure being taken off of the market. Yes, there will be pressures. It will be energy pressures. Definitely going to see egg prices rip to the upside. But egg prices are actually coming down if you look at the USDA report. But I think we're closer to a near-term bottom in the market, sitting at around 57.10, where if we kind of get to 57.10 before that Wednesday print, risk reward, in my opinion, kind of seems like a short-term scalp trade to the upside. Capture that bounce. It'll come in hot. But I think when you have everybody and their mother expecting that and already pre-selling for that, that's where you can have some of these relief rallies that do occur in the market. Yields also kind of ripping to the upside. But at some point, even if it hits 5%, the market was way too aggressive before the rate cuts. They might be too aggressive to the upside when it comes to this narrative of potentially a rate hike at the end of the year, which I believe is going to be possible, but it's only going to be possible if demand increases and not supply side shocks. I do not believe the Fed is going to make the same mistake twice. Now they might not be the brightest in the bunch, and they try to exert monetary policy because of supply shocks. Hint, hint, Russia-Ukraine conflict was not a demand-driven story. It was a supply shock, and they kind of tried to do something with that, which it doesn't fix anything. I don't think it ever fixes anything. So I think we still have a lot of time this year, man. It's only the full week of trading. Be very, methodical. Don't overreact in this market yet. We are seeing a little bit of a breakdown. I think there is pockets of opportunity. We're seeing in today's market, healthcare, materials catching a bid today. Those I think when you're looking at it technically, you could make a case, maybe a little bit of a relief bounce there. But I think everybody's I don't want to say they're on the wrong side of the boat. Inflation will be hot. The key is excessive downside sell-offs because of hot inflation require you to have one standard, two standard deviation from whatever the estimate is. Right now, the estimate's like 0.4%. So you would need to have it come in at high 0.5s, like 0.4 something, 0.54 to still be rounded down, or in the low sixes, to really shock the market. So that's kind of where I'm at with that. Man, I got another thing too. Water utilities in general, they're not looking hot. They're not looking hot. Down 2% today, getting kind of crushed. Water utilities, ticker symbol PHO, up about 0.5% here today. And Jason, we kind of talked about water utilities last year. It's not something that people talk about ever.
No, but it's so important.
Yeah, we talked about it for the latter half of the year, right? In June, we had the election trade. I think we did like an election trade segment or what have you. And so water utilities last year, if you're kind of looking at that price advance that we saw pretty much from June of last year to where they hit at those highs, they actually did fairly well coming back, hitting those June lows for the most part. So maybe a little bit of a relief bounce. And then also given the circumstances of what's happening right now, there might also be another, weather-related trade that could be associated with that. So I do appreciate you.
No, thanks, Kevin. Thanks for coming on. Thanks for taking the time. I know you said you had a hard stop, so
yeah.
Thank you so much for coming on, man. And we'll see you next week.
Sounds good. See ya.
See ya, Kevin.
Real quick, before we go, I just want to cover one more thing, which is the dollar. Let's go to the dollar. We'll go to the dollar and then the Canadian dollar. So the dollar is absolutely ripping. And the thing that we've continued to talk about is, it's going to reverse at some point. It's not in the interest of globally. It's not in the interest of the United States. It's not in the interest of anybody to have the dollar up here. Also, if you're looking at, just what's kind of going on with inflation and rate expectations and all of these things, these are all kind of driving the dollar higher at the moment. That could start to lead into other areas where other currencies, because really all you're really talking about when you're talking about the dollar index, you're talking about if you have to think of currency trading as two different sides. Am I bullish on the euro? Because that's the main currency that's in the dollar index. So am I bullish on the euro? So the answer is no. However, I am kind of looking at some of these commodity currencies and seeing something. So can we go to the Canadian dollar? So the commodity currencies like this, like if we're seeing oil really catch a bid, most of the time, and granted, Canada has changed a lot over the years. It used to be resource heavy. It's not quite as resource heavy. So looking at the Canadian dollar, though, most of the time, if we are seeing oil make a move, the Canadian dollar will make a move as well. Looking at that low from 2020 all the way to that top in 2021, that was kind of when oil was just raging and the dollar was weakening. So now I'm kind of looking for a similar setup here where we possibly see the Canadian dollar start to move to the upside here. This is a textbook setup here, a setup that you're going to see once or twice in your lifetime. Can you go even back further, Sam? Can you go to 2016?
Yeah. This is a huge level historically.
Yes, and it's a huge triple bottom. Once again, people say there's no such thing as a triple top. There's no such thing as a triple bottom. Once again, when you have anybody who says there's no such thing in trading, that's all bullshit. It's all the trading markets that you learn over the years that they can do whatever the hell they want to do. And sometimes this will break down and sometimes this will break out. The thing that you want to do, though, is wait for the reversal. So if we're going back to the dollar, can you go back to the dollar chart? Sorry, Sam, for whipsawing you back.
No, you're good.
But zoom in on the dollar a bit. Let's go to a daily chart. So if we're looking at the dollar, really, I'm looking for a reversal to happen around 107. Like I would start to go, okay, if this thing starts to get down 108, 107, I would say, okay, we're starting to see a reversal. Really, what you want to do with currency trading is you want to look at that 4-day low. So if you see a 4-day low and it starts to take that out, meaning it would take out around, right there. Yep. So 108.08. You start to see a 4-day low and it closes below 108.08. I would say that's where you can start to try to take a reversal trade. Reversal trades are very tough. I'm not saying it's the greatest idea, and you'll have to maybe take multiple shots to do it. But and once again, nobody's trading the dollar index. This goes to the other commodities. This goes to things like gold. This goes to silver. If you want to see gold and silver really make a move, even Bitcoin, you're going to want to see it break down below that level. So if you start to see it break down below that level, I would start to really look at gold, silver, and start to get really long these things. Gold has held up incredibly well considering the dollar has been raging. Same with most of the commodities. The dollar has been raging. Most of the commodity complex is just kind of laughing about it. Same with XLE, up 2.2% today. We got long it the other day. I honestly what's funny is, and this is just a study of myself. If we look at XLE and we go, okay, Jason has taken over the last 2 years, it's been like 2 trades in it. One was a slight winner, one was a slight loser. And it's basically just chopped around for a long time. And this is the first time this trade has happened for me where we got a false breakdown signal. And it said to get long it in the long-term portfolio again. And for me, for the first time in a long time on XLE, I was like, damn, I really don't even want to take the signal. I kind of want to pull this off of my portfolios at the moment. And then I kind of laughed about that and was like, well, that's usually when good trades probably happen.
That's
So
exactly right. Yeah.
yes. So now that I think everybody who's been bullish on XLE since 2020, or God, there's been the energy bulls from 2016 on, they've had a really rough time. But basically, anybody who's been bullish on it, thinking it's going to make a move, I think they're all shaken out at this point. I think everybody's kind of fed up with it. I think if it's going to move, now would be the time, and that would make sense for the reflation trade. Just to see that rally kind of move into a different area. Like I'm not looking at this year and going the Nasdaq's going to be the leader again. I'm not looking at this year looking at the S&P 500 being the leader. I think the trends are going to start moving out and broadening into other areas like energy. Even Kevin was talking about materials, water utilities, like these things that haven't been doing well will probably start to move. So just wanted to end on that one thing. If you got anything to add, Sam, feel free.
Yeah, no, I think you nailed it. You want to bet on sector rotation. You don't want to bet on stocks that have had major uptrends over the last few years. I'm thinking about you, Nvidia.
Yep.
It's been a fucking 13x in the last 24 months. Do you really
Yep.
want to bet on more upside there, or do you want to bet on something like energy that is ripe for a breakout?
Yep.
I like the latter.
Yes. And we're seeing relative strength in those areas too. That's something that I think we haven't, people aren't really talking about very much, is we've seen relative strength in energy for the year to date. So if we're looking at year to date, energy is the leading sector actually up, and that's out of the spider sectors, of 5.5% actually today. Natural gas above that up 8%, and then crude oil is up 10%. So I mean, this is if you're looking at something to tell you that we're rotating into energy, this is about as clear of a signal as you're ever going to get. I'm not saying, I know, once again, let's go back to what we said earlier. There's no 100% in trading. I don't know this 100% for sure, but I can say that's a good possibility.
Right. Yeah, and the thing I like about energy is like it's either going to be the worst performing sector or it's going to be the best performing sector. And if we have some evidence that suggests it's not going to be the worst performing sector, then I want to bet on it being the best. So I think that is as complex as you need to make this trade.
Yes, no, completely agree. So, all right, guys, thanks so much for hanging out with us. We'll be on next week at 11 a.m. Eastern time on Monday. We'll see you guys soon.
See you then, guys.